Hello, everyone. Good afternoon, and welcome back to this weekend's gold market analysis. As you can see on my daily time frame here, gold prices have been on a strong bullish move since the beginning of this year, testing that all-time record high at the $3,500 zone in April before easing into a consolidation phase. And of course, this is evident on the chart. As you can see, in the last 2 months or so, price action remained confined within the 3,500 and the 3,150 to emphasize the prevailing uncertainty within this time frame. And of course, this bullish momentum has been supported by uncertainties ranging from trade wars and rising geopolitical tensions to expectations that the Federal Reserve might start cutting interest rates soon. Now, fast forward to last week. Let me zoom in so we can see things more clearly. Gold climbed sharply. It started around the 3,300. We saw it climb sharply into the $3,440 zone, about $60 shy of its all-time high. Now, this big push we saw last week came as traders ran to safety after increasing tensions between Israel and Iran, which further added to the already growing global uncertainty. On top of that, weaker US inflation data raised hopes that Fed might cut rates sooner than expected, making gold even more attractive to investors. So, right now, gold is sitting at a critical resistance line, as you can see. Since price tested that all-time high, we've seen how this $3,440 area had become a strong barrier for buyers. Every time buyers tried to break through, we saw sellers come in to push price to the downside. And of course, as you can see, last week trading session, we saw price close at exactly that point. Now, the question going into next week is whether or not this level will be broken or rejected. So, if it breaks above this level, we could see a fresh rally towards new highs. But if it fails to push through, we might see a healthy dip towards the 3,300, zone, around that major ascending trend line where buyers could potentially step back in to push price to the upside. So, as we head into the new week, all eyes are on two major US economic events. Now, the first one here is coming in on Tuesday. That's the retail sales data, which will be showing us how strong the US consumer is. Then on Wednesday, we have the Fed interest rate decision. This will be giving us an insight into whether the Fed is leaning towards cutting rates or holding the current rate steady. Now, it's important to note that if retail sales comes in weak and the Fed sounds soft or dovish, gold could break through the resistant line we talked about earlier and head into new highs. But if the data is strong and the Fed sticks with a tougher tone, we might see the dollar bounce and gold could pull back before trying to push higher again. So, what's my plan for next week? Currently, the market sentiment remains cautiously bullish. There is a strong support beneath gold at the moment, but we are sitting right at a decision point. This isn't the time to chase the market, but instead wait patiently, and time our preparation adequately. So in this video, I will be breaking down what price action is telling us about the market psychology and how you can position yourself wisely for the week ahead. Before we dive into the details, just a quick note. Everything I share here is based on my personal chart analysis. This is not financial advice, so please trade responsibly. So, with that said, let's dive right into the business. And my next call is going to be on the 4 hours time frame, where I have a couple of structures that reveals the current sentiment in the market. So right here on the 4 hours time frame, I will be zooming into the structure after price tested that all-time record high at the 3,500 zone, just right here. Let me show you. So right here, and ever since price tested that 3,500, we can see price at falling into a consolidation. And within that consolidation, you will notice that price had consistently found lower highs, giving us this beautiful descending trend line to work with. And not until the beginning of this month, we saw price break out of that descending trend line for the first time in about 7 to 8 weeks. Then it came back to retest the structure last week to incite this move that went back up into the $3,440 zone. Now, in preparation for next week, what is going to be my plan? How do I intend to navigate the structure? So the first thing I identified is my key level, which is duly seated at the psychological number at the 3,400 area. If you look closely into the past, you will see how that level had been a strong resistant line. Even in during the beginning of this month, we saw how buyers were finding it difficult to break through, and not until last week, especially following the Israel Iran situation, we saw price comfortably breaking that structure out. Zooming into the current structure, you will see that price has broken above the 3,400, and ever since it broke out, we saw something like a consolidation, which emphasized the prevailing uncertainty ahead of next week's trading session. And of course, when we see range bound structure like this, we know there is a negotiation going on. And of course, we want to exercise patience and wait for price action to give us a signal in the form of either a breakout of the resistant line of that range bound structure to give us an opportunity to buy, or the breakdown of the support line of the range bound structure to give us an opportunity to sell. So basically, this is the structure I will be using to navigate the market next week. But trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring the character of price action around this range bound structure during the early hours of the week. So there you have it, my in-depth look at the gold market for the week ahead. If this video helped with your independent decisions, give it a thumbs up and drop a comment below. Let me know how you are approaching the gold commodity this week. And don't forget to subscribe for more analysis like this. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.